All right, let's do this. Welcome to CRL, everybody. Chart Request Live, the show where you provide the request, we provide the chart. Spencer Israel here with Jason Pers. Mr. Pers, how we doing?
Good, man. Excited to go through some charts today with everybody.
Let's rip through it. We didn't have a show on Monday because of the market holiday. We're only gonna do one show next week. So we got a lot of requests. We got a backup here in the inbox. As always, if you have any requests, you can drop them in the live chat or email them to us, questions at stockmarketmedia.com. Let's start with our first request here. This one is from Dan. He's looking at FFIV, F5 Networks, and the comment was it's got a nice base breakout, so and it's holding above it so far. So I guess Dan wants your thoughts on this.
Yeah, I mean it is okay. So if we're looking at it long term, yeah, absolutely. We have a massive base breakout here. And it's just starting to get ready, just move higher. Once again, it's hard for me to be bearish something when it's making all-time highs. I think generally that's something you always have to think about. It's making all-time highs, it's ripping to the upside. I wouldn't want to short it. So I'd want to be long it. And I think there's nothing. If you are long already, I would just hang on to that on the long side. The only thing you could possibly do is continue to move up your stop losses. Really, these types of trades, you never know how far they can go. So mainly, moving up your stop, you could go, okay, here's my first entry, here's my second entry, and just having your trailing stop at the old lows. That way, if it does turn against you, you can get out of the position. But I like this chart. I mean, it's a very clean breakout, whether you look at a short-term time frame, long-term time frame. And the best type of trades usually link up like that, where all of the time frames link up. So we're looking at long-term breakdown of a base. If we go to a daily chart, we're also seeing a flag pattern set up. You could draw a pennant there if you'd like. But if you just look at it this way, you go, okay, well, it made a new high. I want to be long it again above 263. So basically, I like it above 263 as long as it holds that zone. I'd say long.
You know what's fun for me is we have a rotating cast on this show. We've got Patrick Donawilla, we've got Alfonso De Pablos, we've got Sam Gatlin, Straza hops in on occasion, you hop in on occasion, and you're all very good chartists, but you all use charts differently, and the way you go about them is different. So I like seeing how you guys use these charts in different ways, and so this is fun for me to just kind of watch you work here. Bottom line for F5 for you is what you just said is as long as you're above the prior highs, right? Good to go.
Yeah,
Green light.
absolutely.
All right, great.
And to your point, it's like some of a lot of guys on All Star aren't very interested in classical charting. I learned from very old school people, so classical charting kind of always comes into me. So the reason why you'll hear me talk a lot about patterns, like a pennant pattern, as you can see here, this is just a nice pennant. And this is just kind of how I learned to trade. Back when I started to learn how to trade, the person I learned how to trade from drew charts on paper. So as they're drawing charts on actual paper, there is no indicators, there is no volatility squeezes. So understanding like a band squeeze was just, okay, what does the chart look like? And that's anything that went from a huge move to a very tight consolidation, then breaking out. Usually that's a good continuation pattern. So just kind of looking at it that way, we have a nice continuation pattern. We have a huge base breakout. So I really like this one. Could be targeting 115 pretty easy. Once again, once you're up here, we could draw fibs. We could do all types of stuff. But really, we have no idea how far this thing could go.
All right, next question here from Danny. Oppenheimer put a $250 price target on Zscaler, ticker ZS. Is there a level to look out for to confirm a breakout or a potential breakout?
So ZS, yes, absolutely. So there's a couple of things here. So if we look at it this way, and we see, okay, we're going to draw a couple. Once again, we have another pennant pattern. These keep coming up already. So a couple of these. And also, if you look at the general market right now, you're seeing a lot of these pennant style patterns happen. And this usually happens when there's a bunch of new moves building and starting up. As you're seeing, the market is moving up to new highs over and over again, but some things aren't catching up. Now, this could be the next one to catch up. So if we're looking at this one here, you're seeing another tight consolidation pattern. If you put a band squeeze, a Bollinger Bands on here, or or Bollinger Band width, you'd probably see, yep, it's coming in and it's tightening up pretty well. So now we're seeing this tighten up quite a bit. That usually leads to huge moves. So what you want to think of when you're looking at charts is you want to think low volatility leads to high volatility leads to low volatility. Meaning, this move here that we're seeing, if we go all the way back to 2020, you see the crash all the way down from COVID. Looks little on this at the moment, but that was actually a big crash that happened. Moved all the way up, wiped that out completely. And that's a huge volatility move. And then it crashes all the way down, even more volatility. Now we've just moved sideways for a very long time. This usually leads...
What is that since? May of 23? Is that what that is?
Yeah, so basically we've been around the same level going back to May of 23. So just straight sideways from May of 23. So that's a very long consolidation. Yes, we saw a nice little move higher here, but we just came right back into it. So it's been in that range a long time. And usually when we see things in a range for a long time, that's exciting. And what I'm saying by that is usually if this breaks out to the upside, it's going to move. And it's going to move in a big way. Think of anything you've seen over the years in very tight consolidation. We just saw the tightest consolidation ever in Bitcoin when it was under 72,000. It just continued under that. And then when it broke out of that level, it went right to 100K. So this is the type of setup that I really like to see. So I'd say, you get over that to, let's just mark it out so it's easier. Get above that 210 level here, 216, between 210, 215, depending on your trading style. That's where I'd say, yeah, you want to take a swing at this one. 215 would probably be the safest bet. Take a swing at it, targeting. The next target would be 258. The next target would be after that 368. So I mean, there's a big move possibly setting up here. This is a really good find. So I'm glad somebody brought this one up.
Big move to the upside or the downside.
Yes.
Whenever this the volatility mean reverts here and comes back into play. So we'll see.
It just depends. So if the person writing in is looking at it in two different ways, yes, absolutely. They buy put options or something, but most of the time we're going to see a lot of traders be looking for upside. If you're buying stocks, shorting stocks is really tough to do on a retail account. But if you're just looking at put options, this is also a great time. And this is something to be said too. This is a great time to look at call options or put options. When you see the price tightening like this, volatility is tightening, which also means implied volatility is tightening, which means the price for the options are cheap. So when they're cheap, that's when you can catch a good move, either upside or downside. Once again, you break that level 215 to the upside, I would definitely trade it up. But also if you break it down and you get below 181, 180, that'd be another time to go, okay, I'm going to look at this thing to possibly move lower. I'd buy some put options.
All right. What about Intuit? Do you think Intuit can break the 2021 all-time highs? When I look at this chart, and I forgot who said this a long time ago, but someone told me, if you look at a chart and you can't make up your mind in in 3 seconds or less, you got too much crap on there, right? And so I look at this chart, and the first thing that jumps out to me is that it is hanging on to this range by the skin of its teeth right now. It's $600 as we're doing this video right now. So the question about the all-time high is 716 from 4 years ago, right? So the question is, can you get back there? What is your take?
Yeah, so if we're looking at this, I'm right with you on that. You really can't make a great decision here. I think some people would see this and go, okay, well, I want to buy the dip. It's at the bottom of the range. There's a bunch of things you could tell yourself in your head. However, when something's falling like that, and because this is a weekly chart, this is making that fall look a little small, but this is a big move lower now that we're on a daily chart. So we're starting to break these major levels here. And so as we're breaking that major level and just getting below, there's going to be either one of two things happening. Either it shows us that it's going to hold that level. And for me, if I'm holding a level like that, and let's say you're a short-term trader, let's say you're a range trader, you could do something like this. You could put a 12 EMA on this. This is the only way you want to buy dips. You never want to just buy dips as things are crashing. It's a losing game. But if you are going to take a swing at something like this, you're going to want to wait till it catches back above that 12-day moving average, just so you have some momentum behind the move, a place where you know where you're going to get out very cleanly. If you're just buying a crashing product, you're basically coming in here and going, okay, I think I know what I'm doing. I think it's going to bounce here. You don't know it's going to bounce. Let's wait till it gets back over, it shows some momentum, and then you could do it as a range trader. Not my style of trading, but that's something that, range traders have taught me over the years, and something that you could do as a range trader as well. Wait for the momentum to come in. It's kind of like, Jason Shapiro always talks about the news failure event, same type of thing. That's a price action based thing. You watch the price move one direction, you get that news failure event. Like, let's say for here, it's a news failure event. You get some news, you get a bounce above that 12 EMA. That'd be a time for you to buy it.
Jason, do we have crypto quotes on?
Yeah.
We do?
Mhm.
Okay. Gerbier is asking for support and resistance levels on Sushi, which is Sushi Swap. I'm not sure if we how.
What's the ticker?
It should just be Sushi. SUSHI. Do we have that? Yeah, we go. Yep, we got it. Oh, there's a lot. Whoa. Okay.
There is a lot of them.
Let's go with the Binance. Yeah, I was gonna say let's just go with the Binance.
This is where we're versus Bitcoin. Let's find one. USD.
Do we have? There you go. Oh wait, no. Yeah,
the Coinbase one.
There we go. Okay.
So USD one. Let's see how this one works. So we're looking at this one, USD support resistance levels. So if we're looking at a weekly, daily. Okay, so I'm assuming they're looking at a daily chart, because weekly is kind of long term. So we'll go through both. So if we look at this chart, very long term, let me move my head out of there. Sorry, guys. So looking at it very long term, there's some zones to get above here, right? So something to just think about here is that this is not a very clean chart. Now, once again, people go online and they find some of these names and they go, oh, these names are going to be good. This is going to work out really well. I'm going to buy Sushi. Really do your due diligence on a lot of these, because I've watched a lot of people fail in this market over the years. Yeah. And I'm a crypto bull. I like crypto. However, there's a lot of things out there that you can get caught on. But I really do like the idea of looking at a base like this and saying, okay, when will this break out? And when this breaks out, I want to be a buyer. So basically, this did have a nice breakout, but it gave it right back. What I find concerning is if you look at that and you go, okay, it gave it right back very quickly during a period where crypto was doing pretty well. So that's something to, and once again, crypto also is doing pretty well the last couple of weeks. Since the inauguration, it's still falling. So there's no relative strength there. So that's something that I would be concerned about. So if it started to show relative strength, it starts to get above these levels once again, I think it's worth a shot. That's a pretty big base and it looks pretty good. So that's going back to 2022. It's a big base that could break out to the upside, and that could be a really good trade going forward. But you have to be cautious here. I'd be very cautious of buying this thing.
All right, let's do a couple more from the inbox, then we'll go to the chat. We got a good question here from Katie. She's wondering if you would consider BITO. This is the Bitcoin Futures ETF. She said it's her first beginner attempt at Bitcoin. The dividend is lovely. She got in at $12. Right now it's at $25. So nice trade so far. But your thoughts on this, Jason? This is the Bitcoin Futures ETF, not a Bitcoin spot ETF. So it does, you can see it on the chart, it does behave very differently to Bitcoin. That being said, thoughts?
So yeah, I always would advise buying the spot product. The spot product is going to be the best thing you can do if you're looking at something like this, because futures have a bunch of complicated things. I'll make it as easy as I can. So basically you have futures contracts. And so as you're going forward in the futures contracts, you either have roll costs or you actually get paid to roll. Most of the time, Bitcoin futures, you have a roll cost.
Wait, so to rephrase that, these futures contracts, they expire, and the value of the contract depends on how far into the future you're going, right?
Yes.
A Bitcoin contract that expires tomorrow is priced differently than a Bitcoin contract that expires in 12 months, right?
Yes, and it's not quite the same as options. So you're not looking at like zeros, but you're looking at very different prices. And so as you're moving forward, this is the reason why you see the ETFs. Think of USO, for example. USO years ago in COVID got crushed because of their roll cost. Mainly, they're rolling in from a zero cost future, which happened in April 2020 when the oil price went negative, and they're rolling it forward to the next month. So they're getting their face ripped off as they have to pay a ton of money for that next month contract, which is the reason why USO almost disappeared, had to restart completely. So it's the same thing when we're looking at Bitcoin. Exactly what Spencer said is spot on. So if we're looking at Bitcoin, they have these roll costs. You're going to see that kind of show up in the price. That's why, as Spencer said, it looks different from Bitcoin. If you look at a Bitcoin chart, we're looking at a weekly. So let's look at BTC USD. Where's mine? I think I'm on Bitfinex still. I'm old school.
Looks totally different.
Totally different. Yes. So totally different chart. Brand new highs. It looks totally different. So once again, it's a be careful with those. It sounds cool. And it also, for them, starting an ETF, it's a gimmick. They go, okay, cool. People, I can say futures. Some people will be interested. All these other people did these spot ETFs already. I'll be the different one. People will pay me money for it. All sounds very cool. However, that roll cost is going to cost money, but there will be periods of time where that roll cost changes. It goes from, and it might be in a contango period. And so if it's in a contango, basically they go from contango to backwardation. So you could look up those terms for yourself.
So basically, in one type of market, in a contango market, the price of the present day contract is wait, I don't want to screw this up because I always get it backwards. In a contango market, the price of a present day contract is more than the price of a future contract, right?
Yes.
Yes. And then so when you sell the current contract to buy the next month contract, for example, you're actually making money on that. But in a backwardation market, the present day contract is cheaper than the next month contract. You have to then sell the cheaper one, buy the more expensive one, because that's your job as the fund that owns futures. You have to do that, and then you're therefore losing money on that roll. And that's normal, actually.
Yes, that's the normal course of action. And once in a while, you see it the opposite way, and that's usually really, really bullish for whatever product's underlying it. Yep. But great way of explaining that, Spencer. That's a very simple way of explaining it. So everybody take that home with you. That's a good one.
All right. Hanson asked about PEN here. This is a Penumbra. This is a healthcare. What do? They manufacture medical devices for neurovascular and peripheral vascular markets. A lot of big words there.
Yeah. Yeah, what a chart.
Oh, and the question was long PEN for a 3-month time frame.
3-month time frame. So just an extra added unsolicited advice as a person who's been trading for a long time. When you look at markets and you think, and you have once again, you want to have time stops, you're a day trader or something. I'm not talking about that. But if you're in a long-term time frame, time stops or time frames are really tough to understand. Just give it a general, generally I'm long 3 to 5 months, and that's what I'm looking for. So let's look at this under 3 to 5 months. We don't know exactly the exact time frame, because who knows, this thing could be an uptrend for the next 10 years. I don't know. But if we're looking at this here, we broke that downtrend line. We're moving up nicely. It's a great continuation pattern to the next high. Right now, we're sitting at a resistance zone. So it is something to just be mindful of. It's in an uptrend, so I'm not going to fade it. For myself, I wouldn't get out of the position and go, oh my gosh, it's going to hit resistance and I need to get out of it. I would just say, hey, it's in a nice uptrend. I would continue to hold this thing. but also understand this might just move sideways for a little while here, which would make sense. But you never know. You never know if this thing's just going to break right above it, keep going. Also, look at the healthcare sector. See what sector this is a weighting in. Figure out, there's and what I'm talking about is there's like 10 ETFs for healthcare. Look for what it's in. Figure out if that's in an uptrend, if it's outperforming it, if it's not outperforming it, if it is outperforming it. Once again, I would just continue to hold this thing, but I see no reason to get out of this trade by any means.
All right, last one, and then we'll do the chat. ACN, Accenture. This is from Jeff. I'm assuming he's asking. Most people ask because they're bullish, and this looks like a lot of the financials. Well, not really. It's been munching up, but I assume he's asking for a long position. So.
Yeah. So no, looking at this, it's also very similar. So if we're looking at this one, and also I don't know if the person talking looked at it long term, but this thing has a hell of a cup and handle pattern kind of building here. So if we're just looking at this like this, that's interesting. So huge cup and handle pattern. So this is a long-term continuation pattern. Basically, think of this as the cup, this is the handle. There's no way to draw that on TrendSpider for some weird reason. But looking at this, yes, I would wait for the breakout zone though. This is, if you don't have a position, if you already have a position, great, you did your job. But if you don't have a position, I would just wait for that breakout zone. And that's going to be here. So 381, 380-ish. So 380, I'd say, hold this thing over that. If it continues to rage in a raging uptrend above that line, man, that's a hell of a trade. Now, granted, I'm on the line chart, so little things like this where it's not connected perfectly, that's just going to happen. But I would really look at this thing above 379.79, 380, depending how crazy you want to get about getting the actual cent right. But 380, man, above that, this thing could take off and probably not look back. So this is a really good chart. I'm glad this was brought up.
Couple from the chat. Wavy like CRK. This is Comstock. This is a favorite of Jerry Jones. He's been buying this one for a while. Yeah, favorite of yours as well.
Yep. Well, I hate saying favorite when trading because it's just making me money. So I like it more. I shouldn't like it more than anything else because that's just how trading goes.
Just because you like it doesn't mean you're in love with it. Like,
yeah, that's true.
You're not falling in love, but you like it for now.
Yeah, I like it for now. Yeah, we're so myself personally, this is one of my long-term holdings in my retirement account at the moment. Just kind of holding this thing, riding the trend. But yeah, this thing's making a huge move. It's going to be tough because if you look at energy stocks, natural gas stocks, whatever, you're looking at a situation where these things make big moves up and big moves down. However, this thing's all the way up with no resistance ahead. I would just hold on to this thing. I wouldn't do anything else but hold on to this trade, and just like I'm doing. So I can tell you exactly what I'm doing with it. I'm using a 60-day trailing stop. So, I'll just show you exactly what that looks like. So you could use a 10-week as opposed to a 50-day. So basically, up here is my trailing stop. It's just going to continue. When I have very long-term positions, when I'm looking at things that are over a year in the retirement account, maybe 2 years, maybe 5 years, depending. I've had some trades in there for very long periods of time. But if we're just looking at that, you can see, okay, if I'm looking at this thing could continue to move up here. That could be your trailing stop. If you're more shorter term, use something like the 12-week that I have on there as well. So I also showed you guys that earlier, which is still on the chart. So the 12-week moving average, and just have a trailing stop. If you already have a position, it's easier to just hang on to it, have a trailing stop. Back all the way back here, we bought this breakout. It just continued to move higher. So this is just a good trade. I really like this chart. Obviously, I am long, but also I want to give a little bit of a warning. If you look back just a little bit, you can see that there's a mess here. And so, as there's a pretty big mess here, this can happen again in the future. We're in a very different market environment. I think it'll be very good to Comstock going forward. However, anything can happen. So be ready for volatility. Be ready for this one to be a little bit annoying at times, but give it room to run. If you give it room to run, let it dance, see how far this thing can go.
Okay, a couple more here. Let's look at Dave for Dan. This actually came up in our internal meeting yesterday. We were talking
Is
about
this Sam?
Dave.
Sam wrote in.
Yeah, right. This came up in the context of it had one of the biggest earnings moves that I'd ever seen back in November. They don't report earnings for like 2 months. That they're off cycle, so you got some time. But it's held the all those gains from that earnings pop, and kind of hung out sideways since then. So I mean, Sam was talking about it. Sam likes this one. Do you agree?
Yeah, I mean, I'm not very familiar with the name, and that doesn't mean anything for me as a chartist. I really believe if you're a full-on chartist, you look at the chart and that's it. Um, but it is a small cap name. Volatility will be the name of this game. So, but once again, I want to show everybody one thing from today that we keep seeing over and over again and why it's important. So these pennant patterns are incredibly important. Now, once again, it's line chart, so it's not going to be perfect. But basically, when you're drawing lines, you basically want to catch the meat of the move. So here's the meat of the move. We got 4 touches here, 2 touches on the top, 6 total, and so we're drawing a nice pennant. Then it breaks out of that pennant. So what I'm pointing at here is you can do this on your own charts over and over again and make money. I had a trader friend who's professional for many, many years. He traded nothing but pennants and flags over and over, literally nothing, over and over and over again. Because he would wait for things to bottom, something would bottom like this, and he would go, okay, it's drawing a pennant. And you can make back tests to find pennant and flag patterns actually on most of the charting software these days. And then you get a bunch that spit out, you buy the breakout, see where it goes. So, I mean, that's a really nice move higher. It looks like it's consolidating once again. So look for it to get moved to the upside once again, and then I would get long it. I don't know if I would just get long it right here. I'd wait a little bit. This is a weekly chart, so that's actually a little bit longer than it looks. So getting over 100, I mean, easy, even number. And another lesson on numbers like 100, and this goes all the way back to reminiscence of a stock operator.
Oh,
he talks
here. Okay.
Yeah. We're going deep now.
We're going way back. All right.
We're going back to the 20s. So the reminiscent of a stock operator basically talks about getting over big even numbers like 100, 1000, 2000, and so on, and the fact that the price never usually just, once it gets over it and closes above it, the price never usually just stops at an even 100. Usually we see a nice move after that. So I do think that if this thing gets over 100, 110 is probably a chip shot. So think of Bitcoin. When it first got over 100K, it made a nice move up another 10% pretty quickly. I think this thing could do the same thing. Okay. Not saying it won't give it back, but for a quick trade, it's a trade.
All right. I know we have a couple more requests in the chat, but we got to hop. We'll be back on Monday with the next edition of CRL. So I will save these requests, Mr. Zerby and Mark. I will write those down. I will save them for Monday's show. We'll be back for that. We got to go now. Unfortunately, sadly, we got things to do. We got research to do. We got trades to put out, and so we got to go. But you can always email us your requests ahead of time. Questions at stockmarketandmedia.com. Thank you, Jason Pers. And
hey, thanks, Spencer. This was fun. See you guys soon.
Adios.